Hi, good evening. I'm Kundan here and going to moderate this session. Most of the people who are watching this session are the complete course on Indian stock market learners, and you have mostly seen me speaking in front of you. But today it will be not me, but Ashutosh who will be taking the charge of presenting himself and also his own journey. So, may I know if I'm audible, guys? Let me first test whether you can see the video, hear the sound. Hi, Ajit, Rakesh, Rajan, Ankit. Hello, Jaspreet. Can you hear me? Am I audible? So I want to confirm whether if we are audible and visible and everything is fine, then we will. Yes, great. So we got the confirmation. So we have Ashutosh. Ashutosh is a graduate from London School of Economics and a graduate in statistics. So Ashutosh is going to tell you people about his own journey as a algo trader, and right now he is associated with QuantInsti, one quant or algo trading institutes based out of Mumbai, but they train people around the globe. And I'm friend with most of the people there. One of my batchmates, Sameer, worked there. Then I know Nitesh Khandelwal. He has been a kind of mentor figure for me, even during this complete course on Indian stock market. So when I saw a lot of questions regarding algo trading, I created one video for you all. But then I thought, why not? I should present you one algo trader in front of you who will share his wisdom, his own journey, and most importantly, why he chose this as a career. As you all people know that I keep telling you that you always have to reason for everything, reason for investing, reason for looking for a career and everything. So maybe we can start this session with me asking Asutosh this question, that why he chose algo trading as his career. Being a statistician, he would have many other role in the society where he could have helped with his skills of statistics in finding more observations within the society, helping them for its improvement. But then he chose algo trading, and I'm sure there must be some reason, because I understand Ashutosh is a aware soul. He must be knowing what he is doing. Okay, so without putting him on spot, I want to hear from him and want to give him this platform of you people. Right now, 425 people have joined, and it's really a great honor for me to host Ashutosh from QuantInsti. I know those people, QuantInsti people. I have very high regard for them, but please don't understand that we are doing it to sell you something. You won't get any discount if you go to QuantInsti just because you have done my course. I won't get any commission. These are very, very important and critical things to tell you, that ethically we are not here to sell you something, but it's just that lot many people wanted to know about algo trading. I'm doing it for you people. Next week, we will have another guest, maybe someone from the industry, who will help you get another, set of questions, answers, and other set of what you can say the queries resolved. So consider it like a generic session where you have Ashutosh who will tell you about algo trading, and then whatever question you have, you can ask him. I may just work like a moderator or a listener of Ashutosh's lecture today. Over to you, Ashutosh. All the best.
Okay, thank you, Kundan. So, guys, it's a pleasure to be here and a great honor to interact with you all through this great platform that Kundan has created. First of all, I would like to congratulate Kundan for starting such a great venture, which has been successful in creating a lot of awareness about financial markets in India. As you know, that Indian economy has grown year on year for the last, I don't know, since 1991, but very small chunk of people have been a part of the great move, right? And one of the reasons has been that there is very less financial literacy, not only in terms of stock market, but otherwise as well. So it's always great to see people who are making efforts and strides in that direction. So thank you, Kundan. for that. Um, so me personally, I think self-awareness is like one has to be self-aware, right? The earlier you become self-aware, the better it is for you. So right when I was in college, I realized like I had a bit of a passion for financial markets, right? And I had a little quantitative band of mind. So that's why I started doing statistics, economics, mathematics. And it was a very natural progression for me to then get into financial markets. So one of the honest reasons was okay, financially, you can do very well. It's a well paid job. Secondly, it's also a service. Like very less people know that liquidity provision is a service. So a lot of algo traders, so-called algo traders, and there are a lot of myths about this term. They end up becoming market makers, and market makers are like any other profession, like doctors, engineers, teachers, and their role in the society is to provide liquidity into the financial market, right? And through that liquidity, it helps the retail investors to get better price. For example, long ago, like before the algo era even started, right, there was around 5 to 10% difference between bid and ask spread, right? So that's like a huge difference, right? So it was not possible for like if a retail person went into a financial market, he would have to pay huge prices in terms of the bid ask spread. But now it is just in terms of ticks, right? So it has kept decreasing as more and more technology was infused into financial markets, and algo trading is like the natural progression in that move of technology. So that is why I think like I've been very fortunate to be part of this industry, and right now I am part of an institution which is helping to distribute those means and tools to general population so that they can also become part of the great Indian story and even global story, because we sell products on a global scale.
Great. Thanks, Ahutosh. Do you have a presentation? As you said, I'll share the screen in such format. Okay.
Okay. So guys, right now we'll go through a small presentation, and the presentation itself has been designed so that it will, uh, you know, clear a lot of doubts and misconceptions about algo trading. It will also tell you what it actually is, right? And even after that, if there are questions, we will be here to answer your questions. So let me just start with my presentation. Okay, cool. So I hope all of you can see the screen. Kundan, if you can please confirm
Yes,
if it's
yes, I have
okay.
shared it. Your presentation is there, and you are also visible.
Okay, brilliant. Thank you so much. Okay, guys, so let's begin. So we have called this a gentle introduction to algorithmic trading. So first of all, where do I come from? So my organization is basically QuantInsti. That's the one in the middle. So we come from a group called as the iRage group. So we work on three verticals. The first one is iRage Broking, which is one of the leading players in the high frequency trading arena in India. Then QuantInsti is where I come from. So it is all about quantitative and algorithmic education. And the third one is the iRain Master Trust, which is like an AIF or a hedge fund. And as QuantInsti, we have several line of products that we give. And one of the more famous ones is EPAT, right? Which is like a 6 month long course, which takes you through the journey of learning like a lot about algorithmic trading. So it is somewhat like a comprehensive course. And then we have something called as Quantra. So Quantra has got self-paced courses, right? And I'll have some opportunity to talk about it at the end. And then we have a free tool which is called Blue Shift, right? So this is a very nice tool as well, and we might see a demo of it if we have some time. So this is basically a back testing and trading platform that we are developing for algorithmic trading. And at this point it is in alpha stage, and it is also free of cost, so you guys are very welcome to try it. Okay, now a little bit about myself. So right now I'm working as senior associate research and content at QuantInsti. In my previous avatar, I worked as a derivatives trader for over 9 years in London, right? So I was trading different derivatives such as futures, options. I saw when things moved on from manual to algo. So I was part of that move. Also, I saw many events such as the flash crash and a lot of interesting events that took place while I was on the desk. Education wise, I have an MSc in statistics from London School of Economics. And I'm also a co-author of a book which is called A Rough and Ready Guide to Algorithmic Trading. And later on, I'll be happy to share a link. It's available freely online, so you can read it from there. Okay, so what are the objectives for today's session, right? So my objective today is that at least what I want to make clear is what actually is algorithmic or quantitative trading, right? Secondly, what are the key steps involved, right? And then once these two things are clear, okay, you will have a very good picture of what this domain is. And later on, I will answer some questions which are very frequently asked, such as how is it useful to you? How does it compare to different styles of trading, right? And what skills are required to get into it, and many such questions. Okay. So for today's session, because algorithmic trading is a very vast domain, so today what we will discuss is just the crux of it, like the bare bones of it, right? So there are a lot of things, lot of new innovations going on. It's a very dynamic domain. People keep trying on a lot of things. So we might not have time to cover all that, but we will still see a very clear picture of where those things will fit in once you have the overall idea. Okay, and then we will also go on to bust some common myths about algo trading. Okay, right. Okay, so first of all, let us see what is the current trading and investing landscape. Okay, so the world we are operating in. So it's not a secret that I think for the past 15-20 years, if you have been following the markets or you have been reading the news, you will see that markets are increasingly being dominated by algos. Okay, and you will hear that a lot in the news. Even the industry has moved towards automation. So this is just like this is for the US market. If you see the market share, okay, so a very large chunk, okay, almost so if you see almost 60 to 80% of the market, right? I'm talking about stocks. They are actually dominated by quant or some form of algo traders, whether they are independent algo traders or they are quant funds, right? Or some other proprietary traders, and so on and so forth. So if you see, the retail participation is only limited to around, say, less than 20%. And all this chunk is basically from some form of quant trading. And these are just some of the headlines that we keep seeing over time. So basically, all the banks are asking their employees to learn the quant way, learn a bit of trading. So if you see here, Citigroup forms lab for traders to code and coders to trade. So those traditional boundaries are now getting erased, right? So at one point, we had clear distinction between the technology guys and the people who would take call on the markets, but that seems to be fading as far as the institutions such as banks, etc., are concerned. And if you see, even after this COVID-19, right? So if you guys follow market, you would have seen that in towards the mid-March, towards say the last 2 weeks of March were like really volatile, and we had like a pretty good recovery after that, like relatively speaking, and a lot of it was credited to the algorithms, right? So, and if you are looking at the job market also, a lot of hiring is taking place in the quant trading industry, right? Maybe not by the big banks that were the usual job providers for like finance graduates. So a lot of that job scene has also moved from traditional banking towards the quant world. And so this is just a chart which depicts, so like in this quarter of 2020, so this is just the performance of various companies, right? And this is for the US market. But if you see, like, there are big names like Amazon, Netflix, right? um, and this is the index itself, which is a benchmark. But if you see, there are some new players. So which one are they? So they are Virtue Financial Inc., which is a quant fund basically, right? And there's another quant based company, which is Market Access Holdings, right? So in terms of performance, these funds have done very, very well post COVID-19 also. And by the way, Virtue Financial has one of the most consistent profit-making records ever. So, well, that has been the case for a long time. So you guys can go and maybe check their financial statements if interested. Okay, so that was just the world that we are operating in, right? But a lot of people ask this basic question, that is, what is algorithmic trading, right? And this might sound like a simple question, but it is not that simple to answer, because different geographic locations have different regulatory authorities, right? And they define it in very like not very but slightly different ways, right? So what constitutes it as algorithmic trading in one country? For example, SEBI is the regulator in India, right? So its definition of algo trading can be little different from the one in the UK, okay, which is given by FCA, which might be different from the one given in the US by FINRA, okay. And it might be completely like it different from something that you hear in Europe after MiFID 2. So it's a little bit of a flexible thing which keeps on changing. But essentially, in simple words, right, what algorithmic trading is, that it can be defined, right, in this simple form. Okay, so it will essentially involve use of computer programs that will set rules to calculate the characteristics of the orders, such as the price, the timing, the size, etc., etc., right? So if this is being done, okay, by someone, then they are some part of the algorithmic trading domain, okay. And so there are two parts. So one is the logic part and the other one is the execution part, okay. So we will explore both in more detail. So the execution part, right, it can be fully automatic or semi-automatic or even manual in some cases, okay. So one of the myths is that algorithmic trading has to be automated. So most generally, yes, that is true, but that's not always the case. So there can be instances where a lot of analysis is done in a way which qualifies as algorithmic or rather quantitative, but the execution itself can be manual, right, or semi-automatic. Now, there are different trading paradigms. So from paradigms, we mean the speed of trading, right? So a lot of us hear the words HFT, right? So HFT stands for high frequency trading. Okay. So in this form of trading, even microseconds matter. Okay. So which is a very, very small time. This form of trading is actually done by a lot of big market makers. So you won't see retail traders indulging in this form of trading quite a lot, right? This also requires co-location. Co-location is a fancy word for putting your servers on the same local area network as the exchange. So you might have heard that a lot of trading companies keep their servers near the exchange, and that is the reason behind it is that they want low latency. Now, low latency is just another word for um, like they want very high speed connection with the exchange, because in HFT your profitability depends on how fast you are, right? So even microseconds matter. Okay, so the next two paradigms are MFT and LFT, right? So in MFT a latency of few milliseconds is okay, right? But in LFT, your strategy will be able to accommodate a latency of half a second to a second, right? So most of the retail traders and lot of even funds, right? They will lie in this category. Okay, so low frequency trading, right, is a form of trading, right, where for example you, you have to buy something and you want to keep it for a month, right, and you want to buy it say in the next half an hour, you are pretty happy, okay, and that stock is not that volatile, so your PNL will not be altered in a very significant way and you are fine with that, right? So that would be classified under LFT. Okay, and this is something that we will explore in more detail in the upcoming slides. Okay, so what is quantitative trading? So quantitative trading is a form of trading where we use statistics. Okay, so a lot of statistical models are used, right, to make buy and sell decisions, right? So the way we do it is that we make very efficient use of the data. So everything is about data, right? We backtest or forward test our strategy on a data set. Okay, and what these terms mean we'll explore in this presentation later, but essentially our strategy has to be validated on the data, okay, using scientific techniques. That's what quantitative trading is. Okay, and more often than not, algorithmic trading will involve quantitative dimension, right? So these words are often used interchangeably, at least colloquially, right? So at times one person might refer to um, algorithmic trading as quantitative, at some other time as automated, some other time as algorithmic, right? But they all mean the same thing, right? Because more often than not, an algorithmic trading also involves a quantitative dimension as and is executed in an automated fashion, right? So that was just the terminology. Okay, so the next part is what are the steps in algorithmic trading. Okay, so now that we know what algorithmic trading is, the natural question is, okay, so I have a rough idea in my head. Okay, this is what I can qualify as algorithmic trading. Okay, it involves some form of quantitative analysis, some form of automation, but how exactly to do it, right? And or what is there a standard way of approaching it, right? So that is what we are going to discuss now. So the first step is what we call the strategy formulation step. Okay, this is nothing but the step where you generate a trading idea. Okay, and how, so in any form of trading, forget algorithmic, any form of trading, it is the trade idea generation. Okay, it happens through which sources? Okay, so it might be that you have been looking for a long time at a particular market. Okay, and then you start developing hunches about the market. Okay, because I think I can recall something like this happened last year in this time, so it might repeat itself. So these are all hunches from past experience, right? So that is one way you can get the idea for your strategy. Second way is through research, and from research I mean you analyze the data, okay, and then you come up with what works and what does not work on that kind of data, okay. And you also can refer to various research papers and different publications, and then you come up with the idea, okay. So in this stage, either way, either through your experience or through research, you come up with a trading idea, okay. And what all factors you need to decide? You need to decide, okay, how are you going to make profits? Why your strategy will be profitable, right? And there can be n number of reasons. It could be due to momentum in the market, or it might be that prices are too away from their mean values, right? There could be increased volatility, right? Then you need to decide, okay, which market segment it's going to work best and in which instrument, okay. For example, if you need exposure to, say, pharma stocks, so should you actually just invest in the cash market, buy the equity, or you should buy the futures or do something with the options, etc., etc., okay. So depending on your risk appetite and the amount of capital you have, you make all these decisions, right? And then you decide entry and exit conditions for each trade, right? So this is essentially your strategy, okay, your logic for entering a trade and your logic for exiting a trade, okay. So that will encapsulate your strategy, right? So this is step one. In step two, you then need to formalize this strategy in some form of code, okay? Because computers and machines and even exchange, right? So these days, uh, everything is electronic. Even in exchanges, they work on different protocols, right? So you need to formalize your strategy in some form of coding language, right? So for HFT, the obvious choice is C or C++ because they are low level languages and hence the execution is really fast, right? But for a retail trader, retail algo trader pursuing MFT or low frequency trading, Python, R, or MATLAB, or one of these languages is a very, very good option, right? And nowadays, what has happened is because not a lot of people, learn programming very fast, or they just don't have a knack for it. So that's why a lot of companies are developing functionalities and tools where you don't even have to code, right? You can drag and drop your logic buttons, okay, and then you have a algorithm which can work for you, okay. So this is the stage where you convert your idea into code. Then comes a very, very important stage. So this is the stage which actually differentiates discretionary trading from what we refer to as quantitative or algorithmic trading, because backtesting and parameter optimization part is the one which makes use of the data, okay. So if you come up with a strategy and you have coded it, now you run that strategy on historical data to check its performance, okay. And if you are satisfied with that performance, then only you move ahead. Otherwise, your idea will end at this stage, okay. And as part of the evaluation, what you calculate is basically you can calculate different metrics. So they could be performance metrics, okay, like what is the absolute money or dollar PNL that this strategy has made on historical data, what percentage of trades were profitable, what was the Sharpe ratio, which is another measure of risk adjusted returns, and then some risk measures like what was the maximum drawdown. So maximum drawdown is like the maximum fall from a peak value, right? Or some other form of risk measure such as value at risk, and there are different metrics. Okay, so this is done on historical data. So once your strategy has been validated on historical data, then you move on to the next stage, okay. And this stage is called paper trading or demo trading or forward testing. So what happens here is that you want to make sure that you have not optimize the parameters of your strategy in a way that is designed to fit well on your historical data, because something which has worked well in past does not guarantee future returns. So what you want to do is to make things more real by testing your strategy on, say, live data, okay, live market data through simulation, okay, simulator, or the traditional word for this is paper trading. So you could have a, various demo softwares on which you run your strategy and check its performance, okay, before you actually take it into market. So back testing and forward testing are very important pillars of algorithmic trading, right? And then the fifth part is, okay, now you are satisfied with your strategy. You have tested it on historical data. You have tested it on out of sample data. So out of sample is just another word for new data or live market data, right? So once that is over, then is the time for live execution. So you just run the strategy in live markets and you check it, you keep a tab on its performance. And one of the important things that you have to manage is the risk, okay, and this risk can come from various factors, okay. So the one of the obvious things is market risk. So market risk is basically your strategy making or losing money due to market, right? um, like your PNL wise, okay. Then there is operational risk. So operational risk is one factor where you need to be careful that your systems are working fine. In case you are employing people, they are working fine. There is like your system does not go down, your electricity, your software, all those problems come under operational risk. So you need to manage it in real time basis, okay. Third thing is your regime changes. So sometimes there are structural changes to the market, right? For example, you could say, okay, so there was one pre-COVID-19 regime and one post-COVID-19 regime. So some strategies that worked well before COVID-19 may not necessarily work well now, right? And some other strategies might work very well now. Okay, so you need to be careful of those structural shifts in the market. And lastly, there are regulatory aspects. So algorithmic trading, one of the things, important things is the regulatory aspects. So luckily, like since algorithmic trading was made legal in India, a lot of retail traders, they go via brokers, and the regulatory aspect is then taken care of by the brokers. So but still, it's always good to be up to date with what circulars are coming out by SEBI and other agencies. Okay, so all these factors come under live execution and risk management. And lastly, once you have a strategy ready and it's working well, okay, but you cannot rely on it forever, okay. So you need to keep researching, keep building new strategies, build a pipeline of strategies, okay. So as all of you know, that diversification is a is the only free lunch in the world, okay. So even in terms of strategies, you just can't rely on, say, one or two to earn your bread and butter forever, right? At least not in the same avatar. So they might need some form of optimization, or you might have to change some parameters, right? So you have to invest time and effort and resources in fine tuning your strategies, fine tuning your existing strategies, or to come up with new ideas, right? And be ready, okay. So now let us summarize how we come to a strategy, okay. So the first part was idea generation, then we backtested it on historical data, then we optimized the parameters so that it did well on historical data, right? And then we tested it in unseen data or out of sample data, okay. And only if our strategy passes all these stages, okay. And let me tell you that not a lot of strategies pass this test, okay. Then and only then you get this green box, which is your strategy, okay. And your strategy is nothing but a set of rules, okay, that will dictate buy and sell decisions. And then you feed that in the form of code into a machine, okay. Now, this was as far as getting to strategy was concerned. So a lot of quantitative research is involved in this part. Okay, quantitative analysis uh, is involved. So this is the quantitative element of algo trading. And the next element is the execution part. Okay, once I have the strategy, how do I actually execute it in the markets? Right? For that, you need, if you are planning to execute it in an automatic fashion, right, what you need is an algorithmic trading system, or in short, ATS. So there are three important modules of the ATS, as you can see on the screen. So the first one is called the market data adapter. So basically, put simply, this is the module which will receive your market data. Okay, and or maybe if you're using a third party vendor, suppose you're using I don't know, Reuters or Bloomberg or some other data vendor to buy data, all that data will come into this part. Okay, and the responsibility of this part, this module, is that it will prepare it, get the data, clean it, prepare it, so that it can be fed to the strategy that you developed in your previous part, okay, in quantitative research. So once you get the data, you clean it, you feed it to your strategy, okay, and the machine will make buy and sell decision based on your strategy, right? And then it will give the logic of when to buy, what to buy, how much to buy, okay? And based on that, the next module will come into play, which is called the order manager. So the role of the order manager is to prepare the orders based on the feedback from the strategy module, and then send those orders into the exchange, right? Cancel the existing orders if your strategy says, okay, pull the order, like cancel the order if so and so thing happened, right, based on different events in the market. Receive confirmations from the exchange, keeping logs. So basically everything to do with order sending and receiving is done by the order manager. Okay, so, and this is just a bare bone, okay, and there can be different models depending on different companies and how you build your algorithmic trading system. But this is a very good like a basic structure, okay, and then you can definitely make it more and more sophisticated depending on your requirements. So now let's see how it interacts with the external world. So this is your ATS, okay, and this is your exchange and data vendor. So the data is fed to the market data adapter. From here, it moves to the strategy module, then it moves to the order manager, right? And this order manager will have a two-way communication with the exchange, right? Because it is sending orders to the exchange, sending information to the exchange, as well as getting confirmation from the exchange, right? Which orders has been executed, have we got a part fail or a full fail, etc., etc. Okay, and then it can also maintain some logs for regulatory purposes. Okay, so this is the external world, and this is your algorithmic trading system that you have designed for automating your strategy. Okay, so this is basically how you deploy your strategy. Now let us see everything in one go. So here's your whole pipeline for getting to a strategy, right? You have some idea, you backtest it, you validate it, you optimize it, then you test it on new data or real market data, right? Once it passes it, it goes on to become your strategy, which is nothing but a set of rules, okay, that will dictate your buy and sell decisions. And then your strategy is integrated like this within a algorithmic trading system, okay. And of course, like the data that you get from your vendor, so that will contain historical data as well as live data for, okay, and that will also be used to forward test your strategy, right? So the historical data goes for back testing and the live data goes for forward testing, right? So this is just one of the ways you can design an algorithmic trading system, and depending on the requirement, different organizations go about it in different way, right? So we have seen, okay, what is algorithmic trading, what is quantitative trading. We have also seen what are the steps involved in algorithmic trading, and we have seen how the strategies are built and executed, right? Now, but why to do all this? Why to take all these pains, right? So there have to be some benefits and advantages. Otherwise, this is an exercise in futility, right? So now let us discuss the benefits of automation. Right. So some very obvious kind of benefits is that number one, if you want to scale
So,
up,
so Ashutosh, sorry to interrupt you. Can
yeah,
I break your flow for a minute?
yes, sure,
Ashutosh?
yes.
Yeah,
Um,
maybe if you want to grab a glass of water or something, it's a long presentation. And then, may I ask other people if they, because yeah, we will take all the questions at the end, but then
sure.
do you want to take up some question now also if someone is having
Yes,
a
yes,
question?
yes.
Will
True.
that be okay?
Yes, definitely. So we can do that.
Okay,
Uh,
so guys, I know a lot of people are asking question on this comment box. So if you have any question, probably you can post, and we will break the whole session into two session where he will take few questions now and few after completing the presentation. It will also give him some breather of 2 3 minutes. He is our guest, continuously speaking from last 40 minutes. So I thought it will be good for him. So tell me your question, guys. So, okay, we have Karthik K. What is the need for forward testing as it is still using the same market data? What guarantee do we have that the data we don't have in past is available in live data? So, Karthi, honestly speaking, we can make some sense out of your question. Let's see if Ashutosh have the answer.
okay, so that's a very good question. And see, on past data, right? When you are building a strategy and optimizing it on past data, so it might look really good to you, right? But it might not generalize very well. Okay, so there might be the market might be in some form on which it is doing very well, but what we are looking for is consistent returns. Okay, and for consistent returns, your strategy needs to be working well on new data or out of sample data, because the money we are going to make is from present and future, not from the past. Okay, so although past is a very good guide, right, as to how you can build a strategy, you need to make sure that it is doing very well, right, in present and in future too. Okay, so that is where the forward testing comes in.
Great. Thank you, Ashutosh. And one question which I've been getting continuously here, at least 10 people have asked, similar kind of question. Are there readily available algo trading software?
Yes, increasingly more and more. So because this is like a very fast growing area as well, and a lot needs to be done right now, right? So this is not saturated at all, but a lot of companies have started making effort in that direction, and now increasingly in India, a lot of like even discount brokers and like full service brokers have started offering different platforms on which you can conduct automated trading.
So that will be in the area of automated trading. May not be the high frequency trading, but automated trading.
Yes, so high frequency is not very viable for at least at a retail level, unless someone wants to, like invest a lot of money into the technology and the infrastructure required. It is definitely possible, but it's not generally seen with the retail level of trading.
Great. So I'll take just one question and then you can finish your presentation. This question is from Nilesh. As it is said that logic and fundamentals can go for a toss in short term, stocks will move in which direction market makers want to move. What is Mr. Ashutosh's point of view on this?
I think, see, my point of view is very simple. My point of view is that we should use scientific ways, right, to our advantage. So this is nothing but using the data, okay, present data and potentially future data and even historical data, okay. So if you can use it to your advantage, that is the most scientific thing you can do to make a trading decision, right? And if you have studied mathematics, there's something called as the law of large numbers, okay. So when you go, suppose you go in a casino, right, and you play roulette, so the odds in favor of the casino are very small, right? But because it's repeated over so many customers over very long periods of time, that the profitability in the business is very, very high. Okay, so that sort of small edge is what traders are looking for consistency purposes. Say everyone can make money, definitely, but very few people can keep it, right? Or not repeat the performance in a very consistent way. So here we are using the data and the scientific tools to achieve that, and that's all it is, right? It is not completely a guessing game, right? It is working with probability. So I hope that is
Great.
clear.
Yes, that is clear. And I got one more question, which I really find interesting. Okay, and let's cover this also. This is Pranav Bhosle. What if I decide my strategy based on my analysis? Then by hiring someone who knows coding, will it be a good decision?
Yeah, absolutely. Why not? Right? It depends on what level of operation you want to have, right? See, um, so algorithmic trading is not a monolith, right? So every one of us will have different levels of operations and objectives. Okay. So for some people, it might be that they want to scale up. So instead of looking at 10 stocks, they want to look at 1,000 stocks, right? For some others, it might just be they want to manage their risk better, right? For some others, it might be that they want to improve their consistency. Okay. And to that end, okay, coding is a means. So either you can learn it yourself if that's feasible to you, it's interesting to you, right? Like if you are like me or a lot of people in the quant world, you would really enjoy having full control over your strategy, right? You want to keep them to yourself because it's proprietary material. You work hard to get to profitable strategies, so you won't share it. But if you just want help with coding, why not? You can definitely take it, right? So if your objective is scaling up and you want to hire people to do it, definitely you can do it. There's nothing stopping you.
Great. Thank you, Ashutosh, and thank you guys for your questions. Keep other. See, I just picked a few questions. This doesn't mean that other are not good questions. We will certainly take all the questions. Ashutosh is a passionate trainer, also, I can tell you. He will take up as many questions as possible this evening, but let him first finish the presentation. And sorry, Ashutosh, if I broke your flow.
No worries, no worries. I think those were very, very relevant questions at right time. So I'm glad we answered them, and it
Great.
will become even more clear once we go through this part of the presentation, which
Great.
is benefits of automation in trading. Okay, so as we were discussing right now, so people can utilize algorithmic trading for their own objectives, right? So there's no one jacket fits all strategy, right? So if you are looking to like trade in a more efficient way, you want to cover more markets, you want your strategy to be live for a long time, right? Then you can rely on power of a machine instead of a human trader. And how is it different? For example, human traders have to be at their desk, right? So if you're not sitting in front of the market and something happens, right, in which otherwise you would have traded, but you have gone for like a tea or something else, or your wife has just called you and sent you to, I don't know, for shopping, you might miss the opportunity, right? So, but if you have an algo working for you, it would execute that trade for you, right? So that's one advantage. Secondly, even if you are at the desk and you are looking at it, something happens, you want to execute your order, but by the time you reach your mouse, you click, okay, that opportunity has gone, right? And this might completely depend on the kind of trading you are into. Okay, so in that case also, because algorithms can work at the millisecond level, right? So you might probably end up getting a fill. The chances are highly likely if you are using an algorithm. Okay, so that's another advantage. Third one is just scaling up. So instead of looking at 10 stocks, your algo can scan over say 1,000 stocks and look for stocks where your strategy can be applied, right? um, then as you scale up your operation, one like derivative of it is that your risk management also becomes more complex, right? So once your risk management becomes more complex, it's not humanly possible to actually manage it properly. So you need like a dashboard and some form of automation, so that okay, even if humans are looking at it, they are looking at a few basic numbers, but mostly the ratios etc are being calculated automatically. Okay, and lastly, as a trick, like I worked as a trader for 9 years, but one of the like things that used to happen quite a lot, at least when we didn't use many algorithmic trading strategies, was called fat finger. Okay, so this is a common word. So if you ask any old trader, they will actually have some story to tell you around fat finger. So fat finger is nothing but when you have by mistake, entered something else into your order ticket. For example, you wanted to buy 10,000 lots, but instead by mistake it was a sell ticket, right? And you ended up losing a lot of money. In some cases, if you get lucky, you can also make money by that, but that will be only by chance. Okay, so all those kinds of error, which are part and parcel of being human, they can be avoided with the use of algorithms, right? And one very big advantage for retail traders as well as other types of traders is that it will help you to stick to your strategy with more discipline. Okay, because so here's a very famous quote, which is like, being human, we are susceptible to both greed and fear, right? So the greed will actually pull you in something, some opportunity might look very lucrative to you, and you might decide to go all in, right? You might say, okay, I'm going to invest all my money into buying this stock because I mean, this is going to be the end of the world trade, like that's my retirement trade. Okay, so that kind of greed, we are susceptible to it. But there's also another emotion called fear. So fear will get you out. So once it starts going offside, from offside I mean your PNL starts dipping, then you start worrying. Then you go back to the charts, you look at the charts, and you try to tell yourself in the head that okay, no, I think I'm still right. So accepting that you are wrong is a very difficult process, right? Being human, for a lot of people, I'm not saying like all the people, but for a lot of people. So, and at some point you will start losing so much money that the fear will kick in. Okay, and then you will end up exiting at a point where later on you will regret. You will say, okay, I shouldn't have exited, I should have stuck with my strategy, with my determined size. I shouldn't have been greedy, I shouldn't have been fearful, and so on, right? So that is completely avoided if you use an automated system. Okay, because it will only enter orders of the size which you have fed previously. Okay, and this begins the point that even before you should design your strategy sensibly, right? So given all that, then once your strategy is decided, your system will act upon it. Okay, and last one we already discussed. So if there's data available, then why not make use of it, right? So like if you rely some decisions based on data, you are also avoiding subjectivity. Okay, because same data can be looked by different people in different ways if you look at it, say, in the form of a chart, right? But if you have set statistical techniques, right, and you are crunching numbers, okay, you have a very good strategy, then your analysis will become little more objective. Okay, so that is another advantage. So I hope that is clear. Uh, so now we will move on to, is algorithmic trading for retail traders? And I think a lot of you would have gotten the answer already. So yes, it is. So an increasing number of traders are using quantitative analysis and automation. So when I say algorithmic trading, okay, so I mean, people are using quantitative analysis also to make trading decisions. Okay, they might not go to like an algo trading platform and execute it. Okay, but they are making scientific, uh, they are taking a scientific approach to analyzing data, maybe like in Excel, in Python, right? Or some other software, right? And they are basing their decisions on that. Okay, and of course some are definitely moving to automation because people want to scale up, right, and do other things. So but for retail traders, a lot of them do very well without algorithmic trading also, like in form of technical analysis, in form of fundamental analysis. So that is definitely true. People can make long term wealth in value investing. People can make long term wealth in technical trading. Definitely that is happening, right? But can some form of quantitative analysis help you make these processes better? Okay, so the answer is yes, and we will see how these things go hand in hand, right? They are not, so it's not like if someone is adopting quant trading, they have to let go of the fundamental aspects or the technical aspects. No. So quant trading is just a scientific way of approaching these domains. Okay, and we all know that they are very powerful domains. Like a lot of people have made a lot of money and done well with them as well. Okay, now, next question is, can retail traders compete? So you hear that a lot of banks and proprietary trading companies and hedge funds are using quantitative trading, okay, in the markets. So what about the retail trader? Will they be like will they be just like baits? Okay, will they be eaten up by these big companies, or they can make a living out of their own, right? So the answer is that these big companies have completely different models, because they will only pursue opportunities that are highly scalable, right? So like a hedge fund has to deploy, I don't know, $5 billion. So they will not get into a strategy which will make you like 10,000 rupees a day. Okay, that 10,000 rupees a day might be very good for a retail trader. Okay, so they are not in competition. But what these HFTs and other players do is that they provide a lot of liquidity to the market, so that even retail traders can participate, okay, and get a good competitive bid ask rate. Okay, that's the point we discussed early on, is that the presence of these entities in the market is beneficial for retail traders, right? And lastly, these big companies have to comply with a lot of regulation, and regulation is very dynamic. The cost of regulation has been going up tremendously. Okay, so after the financial crisis of 2008 and later on, lot of regulations have been like introduced around the globe. Okay, so there is always this regulatory burden on these big companies. So but as a retail trader sitting at home, you don't have to worry about all that uh, regulatory aspects. Like, of course, you should be doing what is legal, but you don't have to pay like huge costs to, say, compliance department or something like that. Okay, you could have a very small and nimble operation. Okay, you can be swift, you can change your strategies, operate at a low cost. Okay, all those things are possible. So the answer is yes. Algorithmic trading is very viable for retail level traders. Okay, so what are the requirements? So requirement wise, first of all, of course, because your strategies are data driven, you need a lot of data, and a lot of free sources are available on the internet. For example, Yahoo Finance, Google Finance, etc., etc. There's something called as Quandle. Um, but if you want to do it at a different frequency, say you want tick to tick, tick by tick data or minute level data, then you have to maybe buy it. Okay, and then there are different vendors which will sell you that data. For example, Bloomberg, Reuters, Quantal has a paid subscription, so you can buy data from there. You can also buy data from the exchanges. So for example, NSE has a whole department which will sell data to you. Okay, so you can get data. Then brokers and trading platforms. So a lot of brokers, as we discussed earlier, um, like in India, a lot of discount brokers, right? The brokers which charge you either nothing or 20 rupees per trade if you're dealing with FNO, are coming up with their own trading platforms which are compatible with algorithmic trading, right? Then programming, of course, you will need some form of programming. As one of you said, can I get it programmed from somewhere else? Yes, you can, but it's better if you keep control, if you just learn some skill, because programming is basically a 21st century skill, right? So it won't hurt you in the long run. Okay, worst case, you can't learn it, it's fine, you can take help from someone else. But that if you want to customize your strategies, some form of programming is required. Then system configuration and software. So unless you are pursuing HFT, which is very unlikely, for LFT and MFT, very like main stream workstation is fine, right? So people are executing trades even from their laptops over Wi-Fi, whatnot, right? Of course, it would be better if you had like a wired connection, whatnot. But I mean, it is like very much possible from the system and configuration you currently own. Then regulatory approvals. So this is more to do if you're thinking of starting a desk, right? Uh, Apart from that, everyone should be aware of some form of rules. If you're playing in the market, better you should know the rules. So, but definitely approval wise, if you are at a retail level, then your broker will get the approvals for you if you provide enough information. Okay, so the next part is how can you add value to your existing trading style, right? So a lot of people follow technical analysis, which is a very, very, like I would say, a very useful way, a useful style of analyzing data, right? We see that there are a lot of patterns, for example, support, resistance, head and shoulder, whatnot. They work very, very well for a lot of people. For some they don't, right? And then there are a lot of indicators such as RSI, MACD, Bollinger Bands. But if you apply these indicators in their vanilla form, they might not be highly profitable. Okay, so if it's profitable, then you are lucky. But if you apply it in their standard form, right, they might not make you a lot of money. Okay, at least that's what my experience has been, right? But when it comes to technical analysis, how are you looking at the data? So you look at it in the form of, say, candlesticks. Okay, and there are like n number of patterns. Okay, that are like spoken about, and of course, it is a reflection of the market factors, definitely. But for example, there's some form of sometimes people get confused because, for example, you say, okay, this is a very like a double top pattern. Someone else might say this is a triple top pattern. Someone else might say, okay, this is some retracement. So if I change the frequency of this chart to say 15 minutes, all the patterns might start looking different, right? If I make it in days, it might start looking different. So that form of ambiguity is definitely involved, right? But if we employ some form of quantitative analysis, then this technical analysis can be made better use of. Okay, for example, so in this one, this chart, suppose if we decide to enter into a trade, okay, where should we place our stop loss and take profit orders? Like, so there is a science which is driven by data, which will exactly tell you, okay, if you buy at so and so price at so and so, then based on the data, this should be your stop loss. So for example, your stop loss should be 5% below the price where you bought, and your take profit should be like, I don't know, 8% or 10% above from that price. But how do you come up with those numbers, right? So that is where that back testing and forward testing that we discussed earlier comes into picture. So a lot of traders will just decide these levels based on their own hunches, but better strategy is to just go back to the data, figure out what works, what doesn't work, and then work on it. So that's at least the quantitative approach. Okay, so you're still making use of technical analysis, but you're also using quant part in it. Okay. Now, similarly, let us look at how we can optimize the parameters when you are using, say, technical indicators. So this one is a very famous one. I'm sure all of you must have utilized it at some point. So this is your Bollinger Band, right? So this is your moving average, and these are your upper and lower bands, right? So a standard definition of Bollinger Band will say, okay, so you take the 20-day moving average and you do plus and minus 2 standard deviation, right? So all the charts you see are based on this definition. So all your buying and selling decisions are made on this definition if you are using the standard way, right? But with quant trading, you can actually optimize your technical trading by finding that those values for this N and K, right? So N is the number of days instead of 20, and K is the number of standard deviations. So why not find those values of N and K which will maximize your total profit, right? They might be very different from 20 and 2. So you don't have to just take any strategy as given. You can take the idea, okay, you can change the parameters such as N and K, and you can test it on your past data to see what works best for you. Okay. So, right. And another very popular way is the fundamental approach, right? So a lot of people will try to value the assets. Okay, they will see, okay, where does the value lie? If some asset is overpriced or some asset is underpriced. So if it's overpriced, you would sell it. If it's underpriced, you will buy it, right? Sorry. So that is almost the fundamental approach. But what happens is that if you are a day trader, right? So then fundamentally the opportunities become very, very less. Okay. And even if there is something, if there's some fundamental reason for the market moves very quickly. It doesn't give you a lot of time to actually act on it and then make money out of it. So short-term reactions to fundamental news are not easily predictable, right? Even if the fundamentals change, the change is priced in very quickly. So you get up in the morning, the market has already gapped up or gapped down, or things like that. So a lot of and even during, say, like one of the more popular numbers that's released is called the non-farm payrolls in the US, which is nothing but the jobs data. So if you're trading interest rates or some such market, it is going to have a huge impact on the market, but that impact is completely unpredictable. So they say, if in doubt, stay out. Okay, so don't trade between those 10 minutes when that number brings in the volatility. So how can we improve the fundamental aspect with quantitative trading? So there's a whole new field which is called quantamental investing, which is a combination of quantitative and fundamental approaches, right? Historical fundamental data can be analyzed and predicted, and basically, if you are creating an algorithm, right, you are creating a model to get buy and sell decisions, you can use the fundamental data as an input into that model. Okay, so for example, if you are trading a company, right, you can make it quarterly earnings as a variable that will be input into your model. Okay, so you can say, okay, if quarterly earnings exceed so and so percent, then only you go ahead with the strategy, else you will not generate any signal, so forth and so on, right? So you can definitely combine quantitative and fundamental, but there are a whole different world of strategies, right? And of course, like for a lot of people, technical and fundamental is good enough. They are very happy and making money, right? So for them, this might not be very useful, but it is very good to know that there exists another types of strategies, like different kinds of strategies people are employing in the markets, right? So this is like the spectrum, the whole spectrum for strategies, right? So there are different strategies which are exclusive to the quantitative domain, right? For example, pairs trading. Okay, it's a form of statistical arbitrage where suppose you want to trade the spread between two stocks. Say if you take Indian IT sector, you see, okay, I will trade the difference between Infosys and Wipro because I think they should move together, right? But Infosys is trading way high. I think Infosys will come down and Wipro will move up to close that gap. So I will sell Infosys and buy Wipro. So that is something which is called as pairs trading. Okay. Uh, Now you can of course do it in a very crude way. You can just define your own levels, but generally quantitative analysis is used to determine, okay, if I'm buying 10 shares of Wipro, then I need to sell like 3 shares of Infosys, right? What are those numbers exactly? And then there are different models such as advanced model, regime switching, cash futures arbitrage, news based automated trading. So a whole new world actually opens up once you become friends with technology, right? And quantitative trading. So for example, there's one whole like domain called sentiment based automated trading, news based. So this is like a headline which was published on 3rd September last year, right? Which says on days when President Trump tweets a lot, the stock market falls. Okay, and this was a finding from Bank of America. Now, how can you make use of something like this, right? Either you have to manually like observe, wait for Trump to tweet, like keep observing Twitter or something, or you can have like an automated strategy. Okay, so a lot of these companies such as Bloomberg and Reuters, they are providing news in a machine readable format. So that news is in a format which can be read by the machines, and machines actually read numbers, right? So it is a form of vectors and matrices which can be fed straight away to your trading model. Okay, and you can be the first one, or like you can get that information in a very fast way to actually make a trade based on it, right? So a lot of machine learning and AI is part of the quant trading, where something called as natural language processing, right? So which will actually convert that tweet into what it will mean for your market position. Okay, so those kinds of logics. Then there is alternative kind of data. So now we have more and more data available. So companies actually look at the satellite images of how many containers are moving, right, on ground or on sea. Okay, and make predictions for demand and supply for oil. Okay, so that is also possible. So all these things will open up once you become friends with the technology part. Now lastly, the last thing we'll discuss is how do I actually get there. So we have heard a lot. I mean, it's like a very vast domain. We have learned a lot. So but how do I actually get there, right? So the skills that are required are basically given in this Venn diagram. Okay, so quant trading actually sits right in the middle, at the sweet spot between programming, maths and stats, and financial markets. Okay, so if you are good at all three, or you are at least good at one of them, okay, then quant trading will make a lot of sense for you, right? Um, so financial market wise, definitely looking into the markets, right? What's going on, like being aware of different instruments that trade in the market, various risk management techniques, and market microstructure, like how the market actually functions in terms of the uh, bids and ask and all that. That all comes under the financial markets, right? In maths and stats, it's basically then probability theory, a lot of inferential stats, right? So probability plays a big role, like in trading or like in life as well. Like, so if you want to make any decision in life, uh, you would of course like go back to your brain. Okay, go like look into your memory, like what all happened earlier, what do you think is more probable outcome, and you make decisions based on that. So probability is very important even in trading. There's calculus, linear algebra, econometrics, and whatnot. But all these come at a advanced level, right? Then for programming, there are like a lot of languages, but Python is like by far the excellent way to start, because the syntax is very much like English language. So, or at least relatively simpler compared to other programming languages, right? So that's the programming part. So once you have all three, I think, and believe me, like not even very expert traders will be good at all of them, right? So it's always a learning process. You just go through learning bit by bit, okay, and finally you would not even realize, and you have a pretty decent grip over quant trading, right? So it's like a step by step kind of process, okay. So right, so here are some final words. So unlike the perception, so a lot of things, okay, so this might sound really complicated to some people. They will say, okay, I'm like, I don't know what's this mumbo jumbo, like there's too maths, this that. To be honest, yes, there is maths, but it does not always have to be complicated, right? So very successful strategies have been based on very simple ideas, okay, like averages, standard deviations, okay. So it does not always have to be complicated, right? But having said that, there's no shortcut either. So it is like, if you want to do it, you will do it, right? So at QuantInsti, a lot of people come from very different backgrounds. Some of them don't even have like a statistics background or a programming background or a finance background for that matter, but over time they have done it, so they picked it up very well, right? So there's no shortcut, and the only way to get there is by working on your skills, learning all the time, right? Working, practicing and applying, right? And finally, consistent effort leads to consistent return. I think we all know that. So there's some, basically trading is called the most difficult easy money out there, right? So yes, you can make money, but our aim as traders should be to consistent profits, right? So that consistency aspect is the one which is important, and that can be brought in using the quantitative aspect of trading, okay. So I'll just take a few moments to explain where you can find some really good free content, right? So basically, we at QuantInsti, yes, we do a lot of paid courses, that's true, but we have a lot of content which is free, right? So one of the things we believe in, that knowledge should be available to as many people as possible, right? For as reasonable price as possible, and if possible free, right? So we have a lot of free content. We have a lot of books. For example, this is a book which was written by me and one of my colleagues, Vivek Krishnamurthy, right? So it is available freely on the internet. Later on, if you want, you can just search Algo Trading book, QuantInsti, and you can get it. Then we have, as I discussed earlier, we have a section on blogs. So we have around 500 blogs, right? Free blogs on various topics ranging from basic finance to maths to trading to quant trading to programming, right? And more than 1 million people actually read them in 1 year from around the globe, right? So feel free to explore it. You can type QuantInsti blogs and you can get there. Then we have our own portal, which has a lot of interactive courses, a lot of which are free, right? So if you type Quantra, Quantra, and you search for courses, right? So you can get a lot of free courses on that portal. And then, of course, we have the research and trading platform called Blue Shift, right? So this is basically
Hi, Ashutosh.
and
Okay,
it is still in
so
sorry, so it is still in development stage. So your feedback will be very useful. Okay. So one last point I just wanted to make was that if there is some of you are interested, so see, algo trading might not be for everyone, but if you think you it meets one of your criteria, right? Then we have like a learning track designed for you, so you can actually explore it. So right now, because of everyone is at home, COVID-19 going on, we have massive discounts going on, and also this learning track, which covers from foundation to advanced level stuff, is available at a very reasonable price. So in case after the free content, if you think it is for you, please go forward and do it. Okay, with that I end my presentation. And yes, and there's a special code just for this webinar. So if some of you are interested, and you can go use this code and get an extra 10% if you have been part of this webinar. So with that, I end my presentation, and let me thank Kundan sir a lot for the patience, and all of you as well. Uh, and yes, we are open for questions, I think.
Excellent session, Ashutosh. I mean, pulling it through for 1.5 hours almost was a great thing. And yes, I we should take questions. I guess a lot of people were asking question. So, guys, you some of you had asked question. Let me go there and check. Or it will be better because some people have also gone or dropped from the session. You people can start asking question now and we will take up that instead of taking the old questions. So we have Anshul Quatra, and can you see the question? I'm highlighting the question here. You
Yes,
can
I
also
think
read that on
yes.
screen.
Yes, is that the one with Anshul?
Yes.
Okay, so Anshul is asking how are funds and institutional traders using machine learning and trading strategies? Excellent questions, Anshul. So, what is machine learning? So, machine learning is basically a way, okay, it's an extension of statistics, in my opinion, which helps us quantify relationships between various variables. Okay, so for example, say delivery volume, uh, net volume traded. Okay, these are all factors. Okay, and can all these things help us to predict if the market is going to go up or down tomorrow? Right? If you take today's data, can you extract some knowledge from it that will help you to predict the market move for tomorrow? So a lot of machine learning algorithms like logistic regression, KVM, um, uh, SVM, KNN, etc. are being used. So that is just one of the ways. The other way was by looking at alternative data like the one we discussed. So you can take a satellite image, computer can automatically check how many ships are there and predict demand and supply for commodities and so on. So yeah, so it is being applied a lot. So all the companies now have data science divisions with machine learning experts.
Excellent. Thank you. Let me. This could be a generic question as well from Sumit Gupta.
Okay, so Sumit is saying we want to make a strategy which work on bullish, bearish, and sideways market. Is there any possibility? Yes, Sumit, definitely. So what you are referring to is that you want your strategy to be neutral to the market, right? So you want your strategy to make money if the trend is bullish, bearish, or sideways. So a lot of strategies, for example, the statistical arbitrage that we discussed is market neutral because you are trading the spread between two stocks, right? For example, Infosys and Wipro. So if the generally the market is going up, both the stocks will go up, but in different magnitudes. So you are playing on those magnitudes rather than the market itself, right? And there are a lot of different kinds of strategies which are market neutral. There are different option strategies, and I'm sure Kundan sir definitely covers those. I've seen in the curriculum the option strategies which are market neutral, right? So all of them will do well or worse depending on how the strategy works, but it will not depend on the direction of the market.
Right. So market neutral strategies, yes, we will be covering, and it is I mean, it is the option trading strategies, or be it the statistical arbitrage. They are all market neutral. So just for the beginners, market neutral is one strategy where, irrespective of any movement in the market, so generally what happens when market falls, you lose money, right? But then you can create certain trading scenario where you will not lose money even in falling market, or you may still lose money if your strategies are not right in moving market, upward moving market. So market neutral, no market risk or no impact of market on your trading strategies. Well, we have a question from Pawan Kumar. Even if one knows machine learning and Python, how do we quickly get started to trade? I mean to ask, do we need a platform to integrate? So Pawan
Okay.
have a question where he can see a possibility in himself to be an algo trader.
Okay. So very good question, Pawan. So as we discussed earlier, right, there is no shortcut. Okay, there can be very easy strategies that can be available to you already coded in some form, right? You can work on them, and definitely the integration is like very easy nowadays because as we discussed, a lot of your brokers and even other companies are providing platforms, right? Where you can easily, which are called APIs, okay, application processing interfaces, where you can just go and integrate your strategy with the market. So the order will still go through from your broker, but the decision making, your buy and sell, will take place based on your strategy, which you have coded, right? So that is definitely possible now.
Great. See, one question is there about your course, Ashutosh. So, since you have marketed your course, now there's one inquiry. If we purchase the course for 1500 rupees, will you teach Python as well?
So definitely Python is part of it, but actually I come from the content part. So again I can go back to the slide. Uh, so I
One.
think all those questions, if you can see, there are some phone numbers of my colleagues. Maybe they will be able to answer it better. But as far as I know, any quant course will have Python component, right? So if you go here, I think you're talking about this one. So yes, you see there's Python for trading basic included, and as you go from foundation to advanced, you will definitely interact a lot with Python, right?
By the way, Ashutosh, I have one personal comment to make here. Just tell your team I'm very, very happy with this course pricing. I didn't knew that one of the main course price has come down so much for the learners. Thanks for making this on behalf of the whole community from my learners as well, because yes, knowledge should be available for everyone at affordable cost. And algo trading at 1500 rupees, guys, I'm not marketing this course. As I keep telling, there is always a conflict of interest when you commercially get associated with someone. So I have no commercial agreement. What commercial agreement can be done for a 1500 rupees course, first of all? And second thing, yes, when it comes to recommending, I strongly recommend all these people who are working there in QuantInsti, or the founders, promoters. I have learned few things from them as well. Options was my not was. I mean, I used to trade option a lot. So Bohra, right? Rajiv Ranjan Bohra is still there. He used to teach us. I did this course in QuantInsti long back, and he used to teach us option. So I'm really thankful for him. Okay, let's take. Can we take more questions, Asutosh? You can tell me how
Sure, sure.
comfortable you
No, no, I'm very comfortable. I'm happy. Yes, we can go on.
are.
So,
Okay,
so
okay.
the course aspects are just one part, but the fun thing is like it's an honor to sit with Kundan sir here today and
Come
to
on, don't
interact with
hold
you
back.
guys, right? Because one to one is even my first experience, and this has been absolute pleasure. And yeah, guys, keep throwing questions. We'll try to answer as many as we can.
Sure. We will take the last. I mean, we will take even the last person question. That's
Sure.
what Asutosh has promised me today. So, No views on market, guys. Amit Kumar Sani is asking about market view. I don't think either Ashutosh or even me will be comfortable predicting things based on news, or those are not very great practices to have. Predicting and taking unsolicited advice from your teachers. Okay, let me go back to other questions. Can you also read the questions, Ashutosh, in the comment box?
Let me see.
I just Okay, so I have highlighted one question from Alpha One Stop. I don't know his
Okay.
question, but this is his ID. So as we
Oh,
know, same strategies don't work all the time, correct? So if we are taking help of programming, do we need to go on learning and deriving new strategies? I mean, it is a never-ending game. Can I answer this question, Ashutosh, if you don't
yes,
mind?
yes, yes, please. Yes, please.
Okay. So yes, the very first statement, as we know, same strategy don't work all the time, is because see, algo trading or high frequency trading is also about identifying gaps. So gap which are available today may not be available tomorrow. Opportunity which is available today may not be available tomorrow, because most of the people have already identified it, spotted it. So those gaps can obviously go away from the market. You may not be able to front run always, and at that point of time you always have to keep making your game up. So every year it will keep on reviving, every month it will keep on reviving. New trends have to be identified, new correlation must be identified all the time. If something Ashutosh want to top it on.
No, no, very well put. I think that is definitely the way to go. See, guys, as we discussed earlier, so trading is the most difficult easy money out there, right? Uh, as more and more people will spot a profitable strategy, the profit margins will be eaten up. Okay, that is for sure. So it's like what I call the bandwagon effect. If too many people get on the bus, then the bus can't move. Okay, so it's very important that you be vigilant, you keep analyzing the data, you try to find something of your own, which is your own proprietary thing that you have found, your own niche. Okay, so that will be your alpha or your edge in the market, because any money that is made based on your own edge. Okay, so yes, it is very important to keep working. It is not like there's no shortcut.
Great. We have Prathamesh who has been asking this question from very long time. In fact, I saw that and then I lost it. How hedge funds are lined up against quant funds?
Right. So very good question. So a lot of hedge funds are quant funds, right? Because hedge fund is just like a legal entity which is set up in a particular jurisdiction, okay, with a mandate, with some maybe some high net worth individuals who can afford to take that level of risk. Okay. So there are different kinds of hedge funds. So there are hedge funds which are, you can differentiate between hedge funds based on the asset classes they trade. For example, there are global macro hedge funds that take bet on like the larger global macro themes. For example, the price of oil in say 2 years or 5 years or something like that. And then there are quant funds. Then there are quant funds which just indulge in arbitrage opportunities, right? For example, Royal Dutch Shell and BP trading, being the same company, trading on two different exchanges at different prices, they can perform arbitrage between the two. Or there are hedge funds which base their trades on mergers and acquisitions, right? So whenever there's some merger and acquisition takes place, they will sell the company which is buying it and buy the company which is being acquired, right? So there's some short-term profit to be made. But whether they employ quantitative techniques and automation in the process of doing the trades is what will differentiate them in terms of whether they are quant or not, right? So that is what it is.
Great. You have Shivam Saxena with a question. Will our strategy be visible to brokers if we are using their API?
Very good question. So this one you will have to ask the broker themselves, right? So different organizations have different guidelines and ethics and what they want to do. So I think there are a lot of platforms. I can name one, for example, the one we are building called Blue Shift, and there are several others like which existed before. They promise not to do it, okay, but that is something for you to check before you sign up for something, right? It will differ from different, like the guys you are trying to buy the platform from.
Okay. I'm sorry, someone is saying that he has asked multiple times. Guys, I'm trying my best to not, skip your question. So Sundar is asking, where can we find sample trading strategies?
Okay, that's a very good question. So can I give you guys a little demo, like 1 minute demo? I can. I
Yeah, yeah,
have a.
share your.
So I will just show you one strategy. Okay, so it is again on our platform, which is called Blue Shift. 1 second.
You need to share your screen for that, Ashutosh.
Okay. So guys, can you see my screen?
No, I have to add that. Yes.
Okay. So there are a lot of strategies. For example, so in Blue Shift, you can just make a free account. So it's free as of now, right? You can go to this section which is called strategies. Okay, and under this one there are some sample strategies. For example, there are some strategies in equity. Let's check it out. Okay. Uh, Okay, so we have something called as the pair example. So this is what I was talking about earlier, right? The pairs trading. Okay, and as this is a platform on which you can backtest your strategy, let's just see what this all is about. So this is the code, right? This is the syntax part that I was talking about. It is completely written in Python. Okay, so on the left hand side is your strategy, and now on the right hand side I can just choose. For example, I want to run this strategy on NSE data. Okay, let me use NSE daily data. Then I can just say, okay, I want data from 2007 to up till last Friday. That means yesterday. I want to start with a capital of 10,000. Over here, I'm doing the spread trading between HCL Technologies and Tech Mahindra, right? One of like two of the giants of Indian IT space. Okay, and then I can just run it. So if you see, it is now it's doing the back testing for you, right? And it will showcase the results over here. So you can just see. So the orange one is your benchmark, which is your Nifty, right? And the blue one is what your strategy would have returned, right? So 10,000 rupees that you invested in your Nifty would have converted into little less than 20,000. But for this strategy, it would have grown to 70,000, right? So this will, the performance will of course differ based on what time frame you take, right? And you have to compare it with other strategies. Okay. So this is just one place where you can find some sample strategies and run it.
Great, Ashutosh. So this is a free resource, right?
Yes,
On the
yes, this is
website.
a free resource. You people can go and check it out.
Right. So Ashutosh, you will do me one favor, and the favor
Yes.
will be make a send me one email, okay? The email which will have the link of everything you mentioned, because some people are asking the link for the course. Some people are asking link for the software which you demonstrated, which is a free software, and every other link. Okay. So
Sure.
what I'll do that, I'll broadcast that email to everyone. And obviously, this session is also getting recorded, so you people can refer to this session back. Okay. Now I know Ashutosh is enthusiastic person. He has been kind also in sharing everything. Instead of asking Ashutosh, I want to ask you guys whether you want to give him rest or you still want to ask more questions. Do you have more question or can we call it off a day? And he will email you all and all the links so that you can further reach out to him, all between you and Ashutosh, and I'm nowhere. So Ashutosh will provide his email, all the links which he has discussed, so that we can call it off a day. And whatever inquiry you have, you can shoot him on his email. And because I'm okay, Ashutosh is okay, but then you people might want to enjoy your evening, Saturday evening, and I'm worried about that. Ashutosh is giving the presentation from last 1.5 hour.
No, it's fine. I am actually used to. So I'll just take one last question. I can just see it in front of me. It's been sitting for a
Oh,
while. So
great.
Samar
So
Shah, Samar Shah says, I don't know how I can highlight it, but he asks how much did Mr. Yeah, uh, it's at 6:34 p.m. So he's
Samaj,
saying how much did yes, Samar Shah.
okay, great.
So he's asking how much did Mr. Ashutosh's experience in traditional derivatives trading helped in algo trading. So let me tell you guys, see, knowledge of finance and financial markets is a requirement, right? So there's no two way about it. Like it will, you are definitely benefited if you understand fundamental investing, if you understand technical trading, right? I don't think. Like I would have done much worse or knew much less if I didn't know the basics well. So subject matter expertise is something which all of us should acquire. I'm still a learner. I'm learning new things every day, and definitely traditional investing and trading knowledge is something that should be a precursor to quant trading. Okay, so please guys keep learning, keep sharing your knowledge with others, and I wish you all the best in your respective journeys.
Great. Thank you. Thanks a lot, Ashutosh, for coming. Say my thanks to everyone at QuantInsti, especially
Sure,
Nitish sir, Rajiv Ranjan Bora, and my batchmate Sam. Okay.
sure.
And just mention that you had good experience with people who joined complete course on Indian stock market, and some of them have shown interest because I knew a lot of people are coming from engineering background, and my own course were not able to solve all the curiosity they have. So I thought, it's a job of every teacher to tell their students that where to also go and learn more. So probably QuantInsti is that place for them, especially people who are from engineering background and want to make a career into algo trading. And I'm really happy that we have a course which is as low as 1,500 rupees course at QuantInsti now, and it will be helpful for them. Thank you very much, Asutosh, for taking out your precious time. This session will be recorded and kept on YouTube, Facebook, wherever these all are. So thank you very much. And yes, I'll send you the email. Don't consider it a upselling email or something. As I keep on saying, there should be no conflict of interest in the financial services industry, so that people can do their job ethically and honestly. What was ethical here was that you people have curiosity, these people have something to offer, and I find them affordable and good. I got you both here, and my journey with your with their journey will never cross. So he will also share your email ID and all the links, and you people can obviously reach out to him. And it's all between you and Ashutosh and QuantInsti now, that how to take this journey forward. Thank you very much. Thanks a lot for spending your precious evening uh, doing
So
some
just
awareness.
one final note of thanks to Kundan. It was an amazing experience. So like the questions that came our way, uh, those were amazing. So it's like thank you so much for providing this platform. And I will convey your regards to everyone at QuantInsti. And again, thank you so much.
Right. Thank you. Thanks a lot, guys. And wish sometime we will do a physical session. Also, sometime we can have better technology where we can also bring you live. And another announcement. So today we did 5 p.m. Saturday with Ashutosh, and he told about algo trading. Next week 5 p.m. I'll bring some industry expert from one of the sector. Oil and gas is one sector which is seeing a lot of turmoil right now in industry. Oil and gas is one industry which impact the stock market and financial market a lot. So I'm planning to bring someone from oil and gas industry with experience in oil and gas industry, and he can tell you about how things work in onshore, offshore, and different type of the operation which happens in the oil industry, and how do he look his own career in front of the career in front of him, which is like going through the ups and downs and so many different things he has to share with you. So next week 5 p.m. I'll get someone from oil and gas industry based on his availability. If he's not available, on some backup, someone from the IT industry who can tell you about what are the what are the important business strategies or business models you should know before going and investing into any IT company, right? So on that note, we will continue this every Saturday 5 p.m. one guest lecture, and they will be sharing their valuable experience, their valuable knowledge with you all learners of complete course on Indian stock market. Thank you very much. Thank you very much,
Pleasure.
Ashutosh.
Thank
Thank you.
you.
I'll end the podcast now. Thanks a lot.
Thank you.